President Trump just tweeting, because of the faulty thought process we have going for us at the Federal Reserve, we pay much higher interest rates than countries that are no match for us economically. In other words, our interest costs are much higher than other countries when they should be lower. Correct. Well, New York Fed President John Williams causing some confusion around the next move on interest rates. Steve Liesman joins us right now with more. You want to comment on that tweet first?
You could do it either way, right? That the reason why we have higher interest rates is because our economy is doing better, so much better than the other ones, and that the interest rates reflect it. And whether or not they actually cause the growth to be higher or lower is another issue. But I do want to talk about a communications, I'll call it a trip up, and it happened in two acts yesterday. Looks like another bout of perhaps tone deafness from the Federal Reserve. Okay, Act One. New York Fed President John Williams takes to the podium yesterday, strongly hints the Fed would cut 50 basis points at its next meeting at the end of July. He says, quote, "Don't keep your powder dry. That is, move more quickly to add monetary stimulus than you otherwise might." Williams goes on to cite economic research, a lot of which he's done, and says the key lessons from this research hold today, and I'm emphasizing that today, and in the future. Take swift action when faced with adverse economic conditions. Markets heard the New York Fed president winking, nodding, and otherwise telegraphing that the Fed would cut 50 basis points. And here are the probabilities: a 100% chance of a rate cut in July, which you can divide into two pieces. Right now, it's a 57% chance of a 25 and a 43 of a 50 basis point cut. But yesterday, after these comments, they shot up to 60%. Not too long after that, however, we get Act Two. The New York Fed says in the comments that Williams' comments were academic and, quote, not about potential policy actions at the upcoming meeting, end quote. We need a frame for the face that Becky just made when I read that.
When I saw that last night, I've never heard the Fed come back and walk back comments.
Alex is smiling. Mr. Lasry is smiling. So let me just finish this off. On the one hand, Williams' comments were in line with those by Fed Chairman Jay Powell, who has said, quote, an ounce of prevention is worth a pound of cure, and made the market think that they would do 50 again. On the other hand, Williams has been a Fed bank president in New York and San Francisco for 8 years, and at the Fed almost continuously since 1994. He had to know, less than 2 weeks before the Fed meets, on the eve of the blackout by the Fed, that the market is uncertain whether it's a 25 or a 50, and that this would all be interpreted as telegraphing a 50. So Williams continues to raise concerns about a certain tone deafness about the market.
I thought maybe this was just
that, by the way, had a
look, when you say it when you're the San Francisco Fed president, people don't pay as much attention. When you're the New York Fed president, they certainly do.
That's true. But John has been influential and important at the Federal Reserve for a very long time. He did all of the work on the neutral rate upon which policy is based. So John was director of research in San Francisco, became San Francisco Fed president, and I've been talking to him continuously. I don't know, at least a decade, maybe longer. And he's been on air continuously for a decade or maybe longer.
So were you surprised to hear these comments initially before you heard the walk back yesterday?
I was very surprised that he would make such explicit commentary ahead of this meeting if he didn't want to forecast 50, right? So
that may be very well what he's planning on voting.
Well, that's true. And I don't think we should let this two-act drama take us away from the focus, right, which should be, is the Fed going 25? Is it going 50? Should it go at all? We had a strong retail sales report. We had strong payroll reports. We've seen the second quarter GDP number inch up from a one handle. Now it's got a two handle. And then the beige book on Wednesday was very upbeat. The economy does not seem that bad. All of this would be preemptive. It feels a little political. And now we can bring it back to the tweet that the president gave. He's been haranguing the Fed for months now to cut interest rates. So, and maybe a little headline dependent, not data dependent, which is what they said they were.
Wait, it feels political. You think Williams's comments were political, caving to the president?
I feel like the whole board has drifted to the, like water flowing downstream, to the easiest possible route, which is cutting interest rates. Whereas, you know, one of the reasons why there's an independent Fed is they can make these unpopular decisions.
Here's my other question. If that's the case, if that's the setup, did the walk back, which again shocked me more than anything else because I've never seen one of the Fed banks come out and walk back what its president has just said, did they get a call from somebody in Washington at the Federal Reserve?
I think they probably got a call. And I think it's worthwhile to explain why. You hinted at this earlier. The New York Fed president, because of the funky way that they created this Federal Reserve Act in 1913, he is the vice chairman of the rate-setting Federal Market Committee.
And he always gets a vote.
He always gets a vote. He doesn't rotate in and out. This was an attempt by Wall Street to maintain its power, whereas the 12 Federal Reserve Bank presidents was a way of otherwise spreading power throughout the country. Always gets a vote. Part of a triumvirate here, right? The chairman, the vice chair of the board,
like the Senate versus the House.
and the New York Fed president. Right. Those are the three. So him talking and saying this stuff is important.
You know how many times we go back and forth about academic studies, me and you always want to...
You and I.
Yeah. Yeah, you and I do it.
Go back and forth. I was just doing my literary English thing.
You know how we do that. And I always kind of like needle you. Oh, we haven't done a study. We can't do any policies about it. And I always say academic studies are worthless. Now you just saw we did 20-year study, but we really don't believe it, and it has nothing to do with.
Joe, you're
but you see what I'm saying,
and I see how you make these funny comments, and I come back and say these are really germane. I'll tell you why.
Yeah, but why are we ignoring it then? We should go 50.
Williams is the guy who did the research, and now he's in the policy-making position. Nobody should be more willing to take this idea of academics.
What I mean. I think it's funny when they say, well, he didn't really mean it. It's just academics.
I'm just not sure.
They were trying to come up with an answer that they could come back and walk it back after they got a call from Washington, the Federal Reserve.
No. Let me ask a question. Why would you end up having a rate cut when the economy is growing at 2%?
Because of inflation.
I get that, but
that's what Charlie Evans, that's his big thing.
I understand that, but the reason you end up having rate cuts is to get the economy going. And now if you're worried about inflation, if that is what you're worried about...
Remember being too low. That's
exactly it. So you're sort of stuck in this loop, and at the end of the day, you only have... If you do a 50 bips rate cut, right, then you only have another 1.5 to go.
Let's say we knew there'd be no inflation for 10 years. Why not just put the pedal to the metal and grow like China? Grow like China, grow at 6%.
Can I just ask Alex Rodriguez a question just because I can?
Yes.
Oh, I thought you were
Alex, you listen to all this, and obviously you're deep in the markets, what's going on. Tell me your reaction to this. And if we spend way too much time obsessing about this, I'll take that.
Yeah, look, for me, I'm looking at kind of 10-year, 20-year windows.
Right.
So all the noise, sometimes, Warren Buffett tells me is a benefit to live in Omaha because I don't get 20 people whispering in my ear every second. I think sometimes we're a victim of information. There's so much information out there that if you worry about buying great assets for a fair price and you hold them for 15 or 20 years, in the long run, that's how I think.